General Brown, can you just spend a minute here and talk to us about the impact that these holds are having on our military families?
There's several factors that I think about as we're going through this and how we are working to mitigate the challenges associated with the holes. There's aspects of readiness and the transition in leadership, and for our young service members to know who is in the position of leadership that's qualified, has the experience to be there, and not, in some cases, putting we have strong deputies, but at the same time, they don't have the same level of experience going forward. In addition to the senior officers, there's a whole chain of events that go down to our more junior officers, and that has an impact. It has an impact on their progression in their career field potentially, because if one doesn't get promoted or move on, then they're blocking a spot for someone else. At the same time, we have several members who have served honorably and are ready to retire, but they're going to, in some cases, stay with us to help us mitigate through that challenge. The area that hits us, I think, that we do need to think about is how it impacts our families, because it has an impact not just for the senior officer, but all their staff and all those below them. It has an impact, and as you highlighted, it's whether it's school, whether it's employment, or the fact that they've already sold their home because they thought they were going to move and now are living in temporary quarters. That creates a challenge. The last thing I'd highlight on that is my concern there is future retention, because we have our more junior officers who now look up and say, if that's the challenge that I'm going to have to deal with in the future, I'm going to balance between my family and serving in a senior position, and we will lose talent because of those challenges. And the spouse network is alive and well, and the spouses will compare notes. And the member may want to serve, but the spouses and the families get a huge vote and why we continue to be able to serve. And I thank my family for that opportunity to allow me to continue to serve.
I see Mrs. Brown nodding her head on this as well.
Hello, friends. Direct deposits will be made tomorrow. The Social Security Administration has confirmed that millions of Americans will receive their monthly benefit payments worth as much as $4,000. But a new group of lawmakers have suggested that the monthly payout amount be somewhat adjusted. My dear friends, please make sure that you watch until the end of this video. Also, to say thank you for being part of this community, I will be announcing several winners this coming Friday for the Walmart gift card giveaway. My dear friends, please make sure you enter the giveaway by clicking and liking several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning the giveaways. Retirees nationwide eagerly await their July Social Security payments, with the first batch set to be distributed this Wednesday. This initial payment can reach a maximum of $4,555, as outlined by the Social Security Administration. The first payment, scheduled for July 12th, will be sent to recipients who were born between the 1st and 10th of a month. The maximum monthly benefit amount varies depending on the age at which an individual has retired. Those who retire at age 62 can receive monthly installments of up to $2,572. Individuals who retire at age 67 are eligible for a maximum benefit of $3,627. But retirees who delay retirement until the age of 70 can receive the highest possible monthly payment of up to $4,555. Social Security payments receive an annual adjustment based on the Consumer Price Index. This is ensure that they keep up with inflation. The future sustainability of the Social Security program has been a topic of discussion in Congress for years. Experts have warned that without proper funding, the program may become insolvent by the year 2033, when the trust fund is projected to run out of money. If Congress fails to resolve this issue, recipients may experience reduced payments in the near future. House Republicans have suggested raising the full retirement age to 69 years old by 2033 despite the current retirement age in the United States being 67. This means those planning to retire soon can still do so at age 62 to begin receiving Social Security benefits. Alternatively, individuals can wait until age 70 to receive the maximum monthly payout. Older adults worry that the payments that they are currently receiving will be cut because of a looming shortfall in the federal program. So it's important to understand that the old age, survivors, and disability insurance affects not just seniors, but also workers who develop disabilities and families in which a spouse or parent dies. Social Security is funded through a payroll tax. Employers and employees each pay 6.2% of wages, up to the taxable maximum of $160,200 for 2023. The trustees of the Social Security and Medicare reported that more money is going out than coming in. And without intervention, the OASI Trust Fund will only have enough continuing tax income to pay out 77% of scheduled payments. Then starting in the year 2031, Medicare's hospital insurance will be able to pay only 89% of the scheduled benefits for hospital services. The Disability Insurance Trust Fund is projected to be able to pay 100% of total scheduled benefits through the year 2097. By the end of 2022, inflation levels had reached an all-time high. Interest rates had grown considerably since the onset of the crisis, and the impact of the supply chain crisis was still echoing throughout the market. So given these unanticipated disruptions, the American real estate market faced a tumultuous and eventful year, but many forecasters are looking at 2023 for being the turnaround year for the housing market. Economists at Morningstar predict that interest and mortgage rates will peak in 2023, paving the way for the housing market to revert to pre-crisis trends. A new Morningstar report expects housing affordability to calm as mortgage rates, then housing prices, and household incomes improve in the short term. Expectations are that 30-year mortgage rates will average around 6.25% by the end of this year, then hit 5% and 4% in 2024 and 2025. In its effort to bring down the highest U.S. inflation in 4 decades, the Federal Reserve will likely need to increase rates a couple more times over the course of 2023 and is expected to deliver a rate hike at its scheduled meeting at the end of this month. Its hikes thus far have not reduced property prices as significantly as expected. Morningstar believes the Fed will eventually ease its monetary policy, win the fight against inflation, and in turn spark the U.S. economy and lead to lower interest rates. That, coupled with a completely unpredictable economy, are making the prospect of owning a home less and less realistic for each generation of new entrants into the workforce. Friends, how is the housing market in your city? Please let me know in the comment section below. Well, my marvelous and most magnificent friends, that is the end of my daily stimulus update video for this Tuesday. My dear friends, thank you so very much for joining me here and for being part of this community. To say thank you for being part of this community, I will be announcing several winners this coming Friday for the Walmart gift card giveaway. If you'd like to enter these weekly giveaway, friends, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dear friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed week.